with your hosts, Tom McNamara and Bruce Woodburn.
Good
Hey there,
morning,
Bruce.
good afternoon, good morning.
It's afternoon now.
Yep. We're used to doing this in the morning. Now we're going to try some afternoon business here.
Yep.
Hope you had a good weekend. A lot of stuff, going on economically. The stock market's doing really well. Bonds have been
Very well.
up and down. I want to talk a little bit about what to expect for interest rates moving forward, and what all is really of interest to you, or what are you finding going on in the market right now?
It's almost like a tale of two markets right now. I sell a lot of property that is under 300,000, and when I list those, man, I get an offer, 5 offers, 8 offers in 2 or 3 days. And then when I sell something higher than 300, like 350, 400, I've got one right now for 5. I'm not even getting showings, you know, and they're priced right and they're beautiful houses. There's nothing wrong with them. It's just I don't know if the people that are in those numbers are actively looking near as much, and I think it's because most of the people have already bought a house and they've got that great interest rate and they don't want to sell.
I'm finding that people are starting to move off of that a little bit more than they were. I think that was a real dilemma for us because you didn't want to sell the house that you had a 3.5% interest rate on to go to an 8.25 or a 7.75 interest rate. But
Right.
now that's tapered down into the mid sixes, for all intents and purposes. I think people are a little bit, they're like, I'm tired of living in this house. I'm having a baby. I got to get into another house. My job's telling me I got to relocate, or you know what? This house just isn't right for me. I want to downsize or upsize. And I'm seeing that more and more people are jumping into the market. But I do have a couple of clients that are trying to sell, $650,000 houses. And I had a client I talked to today, and she's like, I'm just not getting any bites on this property. And I'm like, and it's a gem of a property. It's just beautiful. And it doesn't seem like it's overpriced, but it's just that there's not quite an appetite there yet, which brings me into my next topic.
Yeah.
So let's talk about the numbers, the interest rates, what's going on in the market. So it was interesting because, back in December at the Fed meeting, Jerome Powell had come out and said, we're probably looking at 3 to 4 potential rate cuts on the Fed rate this year.
Mm-hmm.
And everybody just got so excited about that. It was incredible. And interest rates didn't do anything when he said that. They pretty well stayed flat. And then a week later, it comes out where we have the inflation numbers come out, and inflation was up 3.4% from December to December. And it's like, holy smokes, this is going to cause us not to lower interest rates. There's no possible way we're going to lower interest rates with inflation up like this. And then interest rates dropped, right? Go figure. Interest rates dropped when that happened. So then now they come out on Friday, and Jerome Powell says, well, the central bank is really pushing us to drop interest rates. They're expecting to have 3 to 4 rate drops this year and would like us to follow suit on that.
Now, when you say the central bank, you mean the European central banks or world banks?
No, European central banks.
European central banks, yeah. So do we usually follow them, or do they?
Well, it's vice versa. See, they don't like to be too far off from us, because then if they're more attractive than us, then money is flowing into their markets more than
they
our
get
market.
Inflation.
And right. So we're trying to play friendly in the sandbox and make sure that we're doing what we can to help their economy. At the same time, we depend on them as well. So it's a quid pro quo type of a situation where we want to be friendly to each other and make sure that we're not sinking them.
Right.
So, but right now we're back to saying, hey, there could be a rate drop as early as May. Now, here's my opinion on that. So now you got all Jerome Powell's, who is not even an economist. He's an attorney. Don't know how he ever got that job, but he did. Here's my take. Even if they drop the Fed rate a quarter of a point in May, I don't think it's going to have an impact on mortgages, because what I think is going to happen is it's going to stimulate the stock market even more. And when the stock market rallies, then institutional money flows out of the bonds and into stocks. And I don't think it's going to help us at all until we have 2, 3, or 4 cuts. Then I think we're going to really start feeling the benefit of that. But I don't think initially, matter of fact, I think it could even go the opposite direction if we had too early of a rate cut. So you can see an opposite effect happen. And the average person doesn't realize that. They think, oh my gosh, Fed just dropped the Fed rate by a quarter. Right. That must mean interest rates are a quarter point lower today. No, they might actually be higher depending on what happens.
It's crazy how you figure that. I'll tell you another thing, not to get too political, but we all know we're in an election year, right? And everybody that I talk to that's in real estate that's been doing this a while says to expect not a lot of activity, expect all of your activity for the year to happen between now and August. That come September, everybody's going to basically freeze up, because during an election, the folks on one side think, oh my gosh, if we lose, everything's going to go to heck. And the people on the other side, oh my gosh, if we lose, everything's going to go to heck. And so nobody wants to make decisions.
And nobody does anything. Yeah, but I think that post-election, you're going to start to see things coming back.
Absolutely.
I think we're going to have 2024 for real estate is going to be a good year. I think 25 is going to be a much better year. I think that people are just going to settle into what interest rates are. And if they drop into the 5s, then that's just going to get people to jump back in. And going from a 3.5 to a 5.5 rate is not a big deal.
And the longer somebody has that 3 or 4% rate that they have, or the 2% rate, I've seen a lot of those too, right? The longer they have those, the more likely they are to hit one of those decision points where it's not a can I or do I want to, it's a I have to. Right.
Sure.
It's the job change. It's the, the baby or the downsizing or the divorce or whatever that's going to cause people to list. And then, that causes more churn in the market.
Absolutely. And those things are inevitable. I mean, they're going to happen. Everybody has life events, and you just have the need to be able to move. And
you know what the 5 Ds are, right?
What are they?
So it might take a second here. You got death, you got divorce, you got diamonds, you got diapers, and oh man, I can't remember the 5th one.
Death.
Yeah, death, divorce, diamonds, diapers,
and
downsizing.
And downsizing. Boy, it's all the 5 Ds.
5 Ds.
I really like that one. I like the analogy with the diamonds and the diapers, right?
Diamonds and diapers. Yep.
That's fantastic. So if you're looking at buying or selling a home, Tom McNamara, he can help you in any one of our 50 states. Absolutely. And great resource. Not only super nice guy to be around, but he knows what he's doing, and he's a master negotiator. So if you're looking for a good realtor to help you, if you're looking to join a team, he's always looking for great buyer's agents that he would be happy to interview you. And if you're looking at real estate as a full-time job, not a part-time job, maybe he's a right fit for you, because
for sure,
he's a mover and shaker. That's for sure.
And Bruce, I know you can operate in all 50 states as well. And correct me if I'm wrong, but you're looking to grow your team as well, right?
I absolutely am. Our business has just literally exploded since January 3rd. I'm looking to hire loan officers. I'm looking to help loan officers that work for other companies develop their own branch opportunities throughout the United States. And I'm looking for people on my team as loan partners that have 2 years experience in mortgages, preferably licensed, preferably bilingual. And I'm looking for loan officers that would like to grow their business and maybe even help me out with some of my builder accounts. So if you're interested, I'm here, and it's a great dynamic company that we've got more loan programs than any other lender. Our underwriting is super fast, super easy. We're a direct lender. We don't have any overlays. I mean, there's no better company around than Cross Country Mortgage to work for in our business.
Awesome. And I can attest to that. Every loan I've done with you so far is closed fast and smooth.
Yep. We have
All right.
we have the tools.
Well, you have a great night. I will talk to you soon.